many people for a while thought that you might be Satoshi.
Satoshi figured out a better way to look at it, which is you don't even try to control price inflation, you just control the rate of supply, and let the market decide what it's worth. Which is, when you see it, you're like, whoa, so why did we not see that, right?
One of the important things is to understand just why should a Bitcoin treasury company have a premium? Like, a lot of people get confused about this.
Yeah.
They just think, well, you're paying double in the case of MicroStrategy for one Bitcoin,
right,
in their shares, and they think about it purely in the aspects of an ETF. You want to maybe just give sort of your view on that.
Adam Back is a legend in the world of Bitcoin, perhaps the world's best known Bitcoiner away from Satoshi himself. Adam is one of the original cypherpunks, gaining early recognition with his creation of Hashcash in 1997, a solution that Satoshi drew on in his construct of the white paper, and indeed contacted Adam about it in May of 2008 prior to its release in October. This is episode 3 in our subseries on BTCTCs, a space in which Adam is extremely active as both an investor and financial product architect. He has also recently launched his very own BTCTC called the Bitcoin Standard Treasury Company under the memorable ticker BSTR. In this episode, we discuss some of the main names, what he's doing with BSTR, and different metrics for assessing BTCTCs, as well as other considerations in valuing these companies and distinguishing the champions from the opportunists. We took the liberty of recording a slightly longer session this episode, as I felt it important that investors get an insight into how one of the largest allocators in the space is thinking.
Adam, welcome to Pfeffercon, Switzerland. I'm super happy to have you here in the studio.
Yeah, first time here.
Yeah, in the farmland of Switzerland's wealth hub. We met in Vegas a few months ago, and we had a dinner where you and I ended up sort of basically being the last people sat on a table of 30, just shooting the shit on Bitcoin treasury companies.
Yeah.
And we figured it would probably be good to just have a bit of an insight for people on that again, but do that in a recorded manner. So it's great to have you here. But before we get into Bitcoin treasury companies, I think it'd be good for everybody, as we have a fairly wide range. I think anyone who's a Bitcoiner knows who you are, but most other viewers may not know who you are. So it'd be great for you to give a bit of an intro of your background and history in the space.
Yeah, so my connection into Bitcoin was via Hashcash, which is a proof of work function that Bitcoin ends up using. So I was probably the first person to hear about Bitcoin because of that connection. So I got the first email from Satoshi in August 2008, which is some months before the paper was first released and then the network started. So I had some like a kind of self-published technical report describing Hashcash and source code, and it was integrated into various things. It actually was kind of a postage stamp to slow down or throttle email and other types of spam. And yeah, so Satoshi just basically was asking, I'm writing this white paper, so I write in this system, I write a paper about it, and I want to cite your work. What's the correct way to do it? Because it wasn't published in a formal journal, it's just on a website. So I exchanged some emails with him. Originally, I didn't release those emails because, he wasn't reachable anymore at the time where that could become relevant. It's just bad etiquette to share personal emails, right? And I couldn't email the guy and ask him because I presume all those email addresses don't work anymore. So I just sat on them. But then with the COPA trial, the sort of analysts behind it, technical analysts, asked me could they have a copy of them in case something useful for the trial. So I shared them, and so because of that, they became part of the COPA record, so people can look at them if they're interested. So anyway, I when I first got the email from Satoshi, I just thought, that's the guy's name. I would get email for once in a while from people who were kind of researchers or programmers or startup guys using something I'd implemented in the past. And so it's another one of those. But, Hashcash itself was a kind of surrogate for electronic cash. Like what you'd really want to do to help spam is charge the sender in such a way that the recipient receives the value.
Mm-hmm.
And then there's a good balance of value exchange. And if you're getting too much spam, you put the fees up, right? But that was much more technically hard to do. So I found a way to create a postage stamp, so a cost on the sender that wasn't a transferable value to the recipient, but at least you could verify that a cost was incurred by the sender. That was introduced at a time when previous electronic cash system, which was quite promising, DigiCash, had failed economically. It was a startup in the Netherlands, and they ran out of money, basically.
Mm-hmm.
And so anybody who had their kind of test electronic cash tokens, the centralized double spend database went offline, and then you couldn't distinguish spent coins from unspent ones. So that's the end of that. And so the general kind of lesson learned people took from it is you need a decentralized electronic cash.
Yeah.
But, no sooner did I, post that code and description of it, then it sparked a lot of conversation between the other people interested in that to say that this is like digital gold, digital scarcity. Maybe it can solve one of the decentralization problems, which is how to get money into the system. Because before that, it was assuming you need a banking integration,
Mm-hmm.
and it's hard for something decentralized to do that.
Yeah.
And it was actually hard for the centralized things to do that as well, right? So the banks weren't entirely sure if they liked bearer electronic cash, even back then. And so back then was like mid-90s, right? So yeah, so the observation was that, well, if you could just mine the coins, that would, anybody could do that in a decentralized way. So the gap between that and Bitcoin effectively, because I think, a lot of these people were builders. If they found a pleasing, elegant solution, they'd rush off and build it. But nobody quite figured out how to make it work properly, because there was a sort of inflation question. If you could run this, if you do this work and create money, would you get economic hyperinflation or something, right? No. So probably there was some misthinking, but when you're coming at something new, you're kind of fumbling around in the dark.
Mm-hmm.
So nobody figured out how to make it work. Wei Dai proposed B-Money within a year of Hashcash, so 1998, and Nick Szabo, BitGold, which were sort of attempts to get a bit closer to that.
Yeah.
And then Hal Finney in 2004 implemented something centralized where you would do work with Hashcash and get electronic cash coins, but for a central system. So it's got more proof of concept. So yeah, I think, ultimately Satoshi figured out a better way to look at it, which is you don't even try to control price inflation. You just control the rate of supply and let the market decide what it's worth. Which is, when you see it, you're like, whoa, so why did we not see that, right? And it's like a decade before, but there we go.
So one of the outcomes of you sort of being integral to the construction of Bitcoin was that I think many people for a while thought that you might be Satoshi. What was that experience like? You talked a little bit about that earlier.
Yeah.
It was pretty interesting.
Well, I mean, so, I got that early connection to Bitcoin and read some of the materials that Hal Finney was posting on a mailing list in January 2009, I think, just describing his experiments and how it worked and that kind of thing. And then I was busy with a startup, and, I thought it was great that Satoshi had fixed this problem that we'd failed to do. But my question was, is it going to bootstrap? So I just sort of, continued working on the startup stuff, keeping an eye in the background to see, any signs of life, right? So I think in 2012 or 2013, the price popped over $1, and about half the coins were mined at that point. So, that would be $10 million market cap.
Mm-hmm.
And then by 2013, it reached $100. So that'd be $1 billion market cap, right? And so at that point, I thought, it's happening. So that was my rabbit hole moment. So then I was like, well, okay, it's real now.
Mm-hmm.
I need to go and understand, because how I approach technical domain is just go read all the reference manuals, read everything, try and digest everything so that you feel like you understand it, and then you can try and work with it or contribute something to it. So I did try to do that, and did a little bit of my son did a little bit of mining on GPUs, and later some of the early ASICs, and I bought some in that time period conservatively at the beginning, because like the risk perception, right? It was palpable, at some point in there, it occurred to me that, oh shit, these Bitcoin guys might think I'm the Satoshi cat fellow, right? And that'd be a bad thing because they would think you have, 1 million electronic cash tokens, Bitcoin stashed somewhere.
Which are already worth, what is it?
I mean, right. Yeah, that was kind of a little concerning for a few days, but there was nothing, there was nothing I really do about it. It's if you're not like super wealthy, it's pretty out of reach to, hide your residence, have security, all this kind of stuff.
Yeah.
So I just kind of rolled with it, basically. But yeah, that was my realization that they might think that. And later, of course, that it became it is a fascinating thing about Bitcoin that we don't know who Satoshi was, right? And so I understand, but of course, a lot of people then tried to write books and investigate, and they developed their theory, but ultimately there seems to be no concrete evidence from a digital footprint. And I think Satoshi left the space, stopped participating in 2011, something like that. And so, of course, there's a cold trail. There's no new information, right? But certainly, many of the documentaries and YouTube and books and so on, they want to talk to anybody involved and sort of like, see if they can stare you in the eye, see if they look like you're telling the truth, kind of thing. And it's like, I have nothing to hide. It's not me, right? So anyway, that I understand the fascination, but that's the kind of backstory to that.
So, Bitcoin treasury companies, you've been playing around in this space for a little while. I myself got involved 5 years ago when I was managing some money for my parents in a UK structure, and the trustees and administrators wouldn't let me buy Bitcoin ETFs. And so I was sort of scrambling around trying to find somewhere to get at least an allocation for them in that. And it was around the time that Saylor announced. So I said, okay, fine, let's just stick the capital in that. And then, I was worried that they were going to ban buying more MicroStrategy. So I was never able to sell it. So I just became a forced hodler,
right?
Essentially over the 5 years, and watched this beautiful sort of 30x return in terms of real money returns for my parents' structure. How did it end up starting for you?
So it's slightly different. So I'm living in Malta, so I don't have that particular tax problem. But it's clearly part of the formula for some of the treasury companies that there's some difference, sort of anomaly in taxation between Bitcoin as an asset class and shares or other instruments. So it seems to be part of the landscape. But for me, what I saw when Michael Saylor came on the scene and bought Bitcoin on Treasury, I thought that was a very worthwhile initiative because Bitcoin as an asset is good as an inflation hedge over longer term for companies too. And he was, quite quickly trying to encourage other companies to do that, set up his annual conference to provide the blueprint of how to do it and what he did. And so I thought, I want to support what he's doing. And one way to support that is to buy some of his shares with the idea that, if a number of Bitcoiners buy his shares, maybe we provide support if Wall Street decides they don't like it, right? So that was a start into it. And I'm also a quite active trader in terms of Bitcoin-related things. So Bitcoin swing trading, perps, interest rate arbitrage, cross-exchange arbitrage going back to 2013. So as soon as I got active, I started trading again and sort of trying to explore the markets, which were quite inefficient back in 2013 and can still be inefficient today because there's a lot of confusion. So in any case, so that's how I got into it. And then because I started trading it, I never participated in the altcoin trade. Took an instant dislike to the altcoin phenomena as a kind of unethical thing to my viewpoint. But so I was just trading other things around Bitcoin, right? The things I mentioned. So
I got to just say, respect for that. It seems to have been a really easy hole for people to fall down.
Yeah,
is the altcoin hole and mucking around for just trying to make more money and being focused on something ethically true and right.
Well, I mean, the evolution was I joined the Bitcoin Talk Forum in I think 2012, 2013, and like 2 or 3 guys pounced me, so they made a channel. They start talking to me. They're inviting me to be a founding member of their new altcoin. And they're quite technical, so they have interesting technical questions. So I engaged with them a bit. And then I realized, why do they want give me just, tokens or shares because they want to kind of rent my reputation.
Yeah.
And I realized well, this is going to trash your reputation because it's scammy.
Yeah.
And so I'm like, well, firstly, I don't want to hurt my reputation. Secondly, if you wanted to sell your reputation, you might as well at least take the money yourself, right? So I don't want anything to do with it. So I'm not going to participate with your altcoin, and I'm certainly not going to do it myself.
Yeah.
So that was it, right? So that's how I got there in a compressed time period, because somebody put me on the spot of do you want to participate? Want to give you early shares in it, kind of thing, right? So it was quite rapid. So then back on the MicroStrategy track, so I started swing trading it because how I came to price it was basically Bitcoin per 100 shares or Bitcoin per 1,000 shares. And today, it will swing between, let's say, 2 and 4 Bitcoin per 1,000 shares. So it's a bit like trading it based on where the MNAV's sitting. The punchline is, do you get more Bitcoin out? So I look at it in Bitcoin, and it's a pretty fun trade, right? It's, I feel that it's got some hard value under it because he holds Bitcoin. There is a fundamental reason a treasury company should hold a premium. And people are confused about it. So they're overvaluing it, they're undervaluing it, they're overshooting. So it's a nice trade.
Let's talk about that, because I think before we get into the fact that you've also got your own Bitcoin treasury company as of a few hours ago, I think that one of the important things is to understand just why should a Bitcoin treasury company have a premium? A lot of people get confused about this. They just think, well, you're paying double in the case of MicroStrategy for one Bitcoin,
right,
in their shares, and they think about it purely in the aspect of an ETF. You want to maybe just give sort of your view on that?
Yeah, I know that a lot of Bitcoiners have never owned stocks, and they will even say stocks are shitcoins. US dollars, euros, Swiss francs, they're all shitcoins. The only thing they care is so okay, they're not going to buy a share, right? But even professionals in the fund management, a number of those people also are skeptical about treasury company because it's some kind of unique combination. But I think I tried to construct a few arguments by analogy. One is you have a friend who has a dental practice that's a quite profitable, steady business, and he gets interested in Bitcoin. He goes to his bank manager and says, I want to borrow $1 million. And they say, fine, look at his accounts. They lend it to him at a reasonable interest rate. And then he turns around to you and says, do you want to buy 10% of my company? And he wants to charge a premium on top of it. So, he's borrowing money at some percentage, but the applied prices, he wants a premium on it. And then, for a lot of people, they feel offended. Well, I'll do it myself. I could do this. So you go and analyze it. You say, well, what do I have to play with? Can I get an unsecured loan from the bank to increase a mortgage? And you realize your cost of finance is much worse than his and not scalable because you don't have a business. So then you realize that the premium is there is a premium that can be negotiated as fair market premium. Now, that's a private company. Once you get to a public company, the market will tell you what the premium is.
Yeah.
And markets are volatile, so they will overshoot the premium. If you do have a premium, companies have a lot of structural things they can work with, such as they can get an ATM or something equivalent. So when they have a premium, they can sell shares into the market, use that to buy Bitcoin, increase the Bitcoin per share. And ultimately, I think that's clearly the North Star metric for a treasury company. Their mission is to increase Bitcoin per share. And so you can see immediately that there is, by a two-stage argument, a fundamental reason why that should be the case. And another one I tried to do, because people still, are not convinced, is that you take a company like Tesla, where Elon Musk is a quite persuasive salesperson, talks up the value of his shares, they overshoot, people start shorting it. But let's say, because that also has a high PE ratio, is it justified? Well, the point is, when he has maybe an overshot PE ratio, he can raise capital in the public markets very cheaply. They build a new product, say a Cybertruck. Let's say it's a hit. Now that defends the value of their shares. And so by analogy, what people are doing with treasury companies is if they are overshooting, they're taking capital off the public market and they're justifying their premium by putting more Bitcoin per share. So now maybe it justifies that premium.
that brings a really good point to it. And I think using Elon Musk as sort of the visionary leader says, means that there's a way for you to potentially be more aligned with a company based on their leadership. And I think that is a really important thing. From my perspective, I care about the leadership's ability to raise capital, the fact whether or not they're a real Bitcoiner. I think that is really important because when it comes into a bear market, you want to make sure that they're not going to panic and, run away from the strategy. And then financial engineering. I think the capability, and one of the reasons I love Metaplanet so much is Simon's a derivatives trader. Dylan's an extremely smart young guy who understands derivatives very, very well. And so as a result, you've got that capacity. Same with the blockchain group, French engineering. In the derivatives market, it's always the French that are the derivatives traded. So yeah, financial engineering. So when you put all of that together, you end up, in my perspective, those are things that I would attribute to a better level of management and a management that I can get behind and attribute a better MNAV to, which is self-perpetuating, as you say. Are there other factors that you look at in the leadership team?
No, I mean, the ones that, what I've tended to invest in terms of treasury companies, so I participated after MicroStrategy in Metaplanet, and my path into that, initially I thought, wow, your NNAV is really high. I'm not sure if that seems risky, right? But I know Batara Eto, who's on their board, and I think was involved in them taking Bitcoin in, and I knew him in the Bitcoin context for a few years before. And so, my thing is I'm more inclined to trust somebody I know and have built up some trust in.
Yeah.
And so I got some founder warrants, which were a bit discounted. So I tolerated the risk because of the discount. And then I got comfortable with it by looking at the months to cover, basically to realize that actually maybe the high MNAV is lower risk than intuition suggests it is. Because if they are creating Bitcoin per share very rapidly, the risk you take by buying a high MNAV, that the MNAV decays and the accretion rate decays, is risk is often expressed as time in the market. Like, how long do you have to tolerate risk until you recoup your capital? And so you can calculate that based on the historics anyway. So you see, and it turned out with Metaplanet, they could pay for the risk premium of that high MNAV at 5 within 5 to 6 months, which was surprising to me. That wasn't what I was expecting, right? Because MicroStrategy historically has been able to do that starting with a 2 times MNAV in about 18 months. So from that point of view, in one way of looking at it, Metaplanet's lower risk. You don't have to stay in market as long. But on the other way, it's higher risk. It's got a lot further to fall. But it's certainly, the intuition was wrong, let's say, right? So then I got comfortable with it, bought more of it, traded it, and so on. And so, you can see a pattern there, which is I would sooner place my bets on somebody I trust and who, so I know they believe in the mission. And they're not, and with any company, it's not like a financial product with a prospectus, exactly, right? So you have to trust the management team to a certain extent. They could change the strategy, right?
Yeah.
And so that's a risk. So for example, with GameStop, when they did the Bitcoin purchase, I think there was some kind of pipe you could invest in. It's like, no, meme stock, meme management. Yeah, don't trust that guy. And I talked to a few people, and that was a similar kind of viewpoint. So I was like, okay, not touching. So yeah, and I think, as you said, the blockchain group, OPG, did very well, and very, very. I mean, execution, I guess, is the other point. Mm-hmm. They keep the pace up. They focus on execution of the strategy. And H100 with Sardar Anderson, similar story. I've known him for a few years in the sort of tokenization and wealth management, tokenizing SPVs between wealthy parties for private transactions, that kind of thing. And of course, he's worked for a long time in the capital raising, so he knows the space. He has his own network. So again, that's the trust and the right experience, and that was also worked quite well so far.
Yeah, I think for me, actually, one of the really differentiating points around Sander is his ability to raise capital very aggressively. and buy more Bitcoin. And of course, understand that aggression is necessary when you have a high MNAV. To your earlier point, like it's funny, there's this chart that someone made, I posted on Twitter recently, of like Metaplanet stock just going like this. And down here is a 20 times MNAV. Like if you missed that little blip because you were mucking around saying, okay, that's too high, then you missed a 3,000% rally in the stock.
Yeah.
And I think this is one of the hardest things to understand, because it is, as you say, it is a problem. If you've got a high MNAV and the management team don't capitalize on that to raise more capital to keep up with the amount of Bitcoin on the balance sheet, and therefore it's not running away to a significant degree, then the only other thing that can happen is the stock falls. Right.
Yeah. I mean, there are companies with Bitcoin on the balance sheet that don't really seem to, I mean, one version is the Bitcoin is de minimis. So it has a high MNAV notionally, but the Bitcoin is too small. And the reason it's a high MNAV is they bought some Bitcoin, nothing further happened. So it becomes not really correlated. And then the other one is, they buy a certain amount of Bitcoin and they're completely inactive. So it's trading at, 1 times MNAV or even less, strangely, right?
Yeah.
So we've seen that happen in a few companies. I think the other thing is it's a slightly forgiving trade. So I have noticed that, if you kind of mistime it, you buy it at 4, it decays to 3, it looks like 3 might be the norm. They're still accreting Bitcoin.
Yeah.
So if you stay in market for however months that is,
exactly,
you'll be back at the equivalent of 3 anyway. And apart from, so I think the other interesting thing is I've, been actively trading them. And then if you go back, look at it afterwards and say, well, if you just bought it there and stayed there, the accretion would have got you to par, and then you could just sit there. You don't have to trade them either, right? So it's appealing when you understand the technical aspects of it for passive investors, what you described being a kind of forced holder of much strategy, that because the accretion works for you, it recovers the MNAV, and then you can just stay in market.
I think that trust of founder or trust of leadership is a really important aspect as well. Like, we've watched Saylor do this for 5 years now, or just over 5 years. We know that nothing's stopping him. Like, he's not going to stop for anything, unless he gets shut down by the US regulator for some reason.
Right.
Like, that is pretty much the only thing that's going to get in his way. So he will keep accreting for the benefit of the shareholder no matter what. So you can sit in that trade for that much longer period that it will take him to accrete that MNAV, because he's just so much bigger.
Right.
I think his month to cover is about 21 months last time I looked. And then, same with Metaplanet. I mean, they've just shown time and time again that they can keep executing, they can get bigger and bigger. They've obviously got a nice advantage in that they're the unique player in the Japanese market, and they're taking advantage of these NISA accounts. People are doing very well out of it and made a lot of money. So they got some hardcore fans and shareholders.
Yeah.
I think, this is what you need to see, certainly with the propagation of all these brand new companies, you need to just make sure that because there's going to be opportunists, right? This is something I talk about all the time. It's like that trust of management, trust to execute, trust to keep going it's just such an important part of this. But also being able to spot that early and get them when they're a lower market cap, where they can really have huge torque, is a huge alpha generator. So how do you think about that with some of these newer guys popping up?
Well,
talked about Sander, but like others.
Yeah, I mean, of course, there's been a lot of SPAC activity and RTOs in the US and other markets, and it's starting to become a big number. So, a common pattern effectively has been that, somebody will come to Wall Street or the market, they'll raise money in a pipe or some other mechanism, buy Bitcoin, then raise a convertible note, buy Bitcoin with that, and use the Bitcoin as collateral for the convertible note, and then market it because they're done, right? It was other people's money. So all they really have is the marketing and the hope that they're going to be able to execute on it. So I think, what BSTR, Bitcoin Standard Treasury did is we did it the way around. we came with a size of Bitcoin.
So just for clarity, this is your company launching
Treasury company, yeah.
very shortly.
Well, it's
Maybe just start at the beginning for people to understand.
yes. So it's a new company,
Yeah.
which we myself and a few founders put Bitcoin into, and then engaged with Cantor as bankers to raise capital in this around a SPAC, to then with regulator approval merge with it. So the SPAC is called CEPO. It's a pre-existing listed NASDAQ listed SPAC, which was trading. They generally trade around the reference price $10. I think it had a little bit higher price, perhaps because people saw Cantor do previous treasury companies, so they would speculate that maybe this one will be used for that purpose.
Cantor did 21 Capital. Who else did they do?
I'm not sure. I think they've done a number of things, but I think they're in both parts of the business. They have some of their own branded SPACs. So the C is Cantor and CEP and CPO. But I believe they also have a business where they will help with fundraising for SPACs created by other parties. So I'm not sure where it breaks down, but it seemed to me they were active in a number of things.
So they had this SPAC. How much was in the SPAC?
200 million.
200 million. So it's relatively big SPAC or sort of mid-tier SPAC.
Yeah.
But then they did PIPE.
Yeah. So, we started with a size and then upsized it based on demand. So where it landed was a 400 million equity PIPE, a 500 million convertible notes, and 2 shoes of 150 million each, which are, options which are 15 days and 30 days. So, in the next period, if they fill, that becomes a 750 million convert. And in common with other recent treasury company SPACs, those are 3 times over collateralized with Bitcoin. Now, typically a constraining factor is how much Bitcoin they can.
Sorry, hang on. They're 3 times over collateralized because you use the 750 million that you raised from the convert to buy Bitcoin to then put in the company, or you're saying that 200 million is that the reference to the?
No. So the difference here is that we came with a new company, which we infused with 25,000 Bitcoins.
Right. Okay.
And so we came with the collateral.
So roughly approaching $3 billion worth Bitcoin collateral.
Right.
To basically collateralize the convertible debt and the equity preferred.
Right. Well, technically the equity preferreds are not collateralized. They're just higher on the cap table, right? But and we should talk about the equity preferred because we just don't have that. But so let's start with backing up to the basics. So it's 200 million SPAC. We proposed to merge that with a new co with 25,000 Bitcoin in it, as you said, about 3 billion at today's prices. And then we did equity PIPE that got upsized to 400 million. We also, and then let's just one thing at a time. So, and then we did the converts, which got upsized. So the base is 500 million, which is, that's in place. And then there are shoes to increase that by
another 250.
Yeah. So sorry, 125 and 125, so 250. So that gets to 750 on the convert. Now, there are 2 more components to this raise. So one component is we also had a Bitcoin PIPE where people could invest in an equity PIPE using Bitcoin rather than dollars. And so that has 5,021 Bitcoin on it. You can see that somebody thought it was interesting to top it up to 21. And so, that is an additional 600 million approximately. So that's the combination of the equity and the converts. Now, of course, that capital will be used to buy Bitcoin, but you don't get the capital until the close to the value, right? And so now the other thing we did is we went to market out of the gate with a convertible preferred. So this is something in the domain that MicroStrategy has been doing, after some years in the market, but with Cantor's input, we try that. So that also got upsized. So that's 350 million in itself. Now that is, a 30-day option, so it's not filled yet, but it appears that there's appetite for it. It's a 7% coupon price. I'm not sure of the exact price. It's all moving like.
So it's based on 10. So all of your conversion prices are based on $10 of the SPAC.
Right.
And
so it's the 13
at 16 anyway. Right. So it's definitely close because it's 30.
Right. I mean, it's all in the money. So one could assume, I think, that people would not redeem from the SPAC. So the 200 million should stay, assuming the price stays there, right, or better. And the same for the converts or the preferred, plus and preferred have a discount because it's a new product, and then you let the market price it.
So you have 3 billion plus the 200 million sitting in the SPAC, plus the 350 million from the equity preferred, plus the 750 million from the convert itself.
So all in is...
And the pipe, 500 million, or 600, 600, yeah.
Yeah, so 400 in the equity pipe, 600 in the Bitcoin equity pipe.
Yeah.
So all in, that's 5.3 billion. And the raise itself, because you don't count the SPAC because that's pre-existing money, and we don't count the 3 billion Bitcoin in the new code because that's not part of the raise, right? That's founded.
So you got fresh capital.
Fresh capital is 2.1, roughly, assuming all of the optional things fill.
When do you imagine that you get that combination?
So it really depends on the regulators. So it sounds like the range could be 3-4 months, something like that. So
it should be easy because you're a holding company. Essentially, it's not like you've got an operating business that you need to file too much information.
Right. I mean, I think that is one of the reasons that it's been a more common pattern to have a NewCo, because RTOs, public RTOs, they can look at a public already audited, public company audited accounts. But for a private RTO, which is the actually original purpose of SPACs, now you have to uplift the private company accounts, and that can generate round trips.
Absolutely.
So I think the NewCo is a cleaner, faster approach. Yeah. Another curious thing is that, a core business can have risks, right?
Yeah.
So of course, you can take sort of sensible steps to ring fence and isolate business risks, but it's a factor. So yeah, that's what we see. So, and the ticker we have reserved and was available as BSTR, so Bitcoin Standard Treasury Company. So Bitcoin Standard, nice homage to Safety Namusa's big book, right? Yeah. And BSTR also have a nice play on MSTR, the trailblazer here, right?
Yeah, absolutely. That's nice. Very good. Look, as always, we're sort of going down rabbit holes, and we're going deep on the aspects. There's a lot of stuff I wanted to cover in this conversation, so let's use your company as a way to sort of address the next question. I think what I wanted to talk about was, what is the perfect Bitcoin treasury? Like, what would you as an investor want to see in a brand new Bitcoin treasury? And I think this is the question that a lot of investors have, because I always describe a Bitcoin treasury company as a multifaceted diamond. You can look at it in so many different ways and see the value that someone else might not see.
Yeah.
And so it is a really complex thing to value. So in terms of obviously what you're trying to do with BSTR, what are the things that you're trying to align obviously with that to make sure that you're ticking all those boxes? What are the key elements?
I mean, I've invested in a few different treasury companies, but apart from the pre-existing public ones being MicroStrategy, now Strategy, and Metaplanet, also the blockchain group in Paris, and H100, the Swedish company. I also invested in some of the pipes of other SPAC-related treasury companies in the US markets. Actually, not all in the US markets, but 3 of the 5 are in the US markets. And, because I've been trading the treasury companies, and early on I built up a position in MicroStrategy and talked to Michael Saylor and the other management team, the new CEO, the new CFO, when he stepped up to be chairman in that time frame, to propose ways to them that I thought they could improve shareholder value based on some of, the things I've been doing in the Bitcoin market as a kind of concept. And, I think there are different flavors of how people view things. Like, some people want to cold store Bitcoin or store it with a custodian. Some people are okay, writing puts or generating low risk yield in some ways, right?
Yeah.
And so that was effectively what I put to Michael Saylor, that he should consider the low risk yield. And you can see that Metaplanet is doing some option strategies. So it really depends, how you do it. Now, as somebody that's been on my own account doing low risk Bitcoin related yield strategies, I was very conservative and was shocked by the, 8, 9, 10% yields being offered by people in the market a few years back, which all ended in tears, right? And the reason is just that you get a feel for what is achievable with a low risk. And so if somebody's offering 2 or 3 times the achievable rate, there's, they're understating the risk, or they don't understand the risk, or it's uncollateralized. And it turned out there's a lot of uncollateralized and then contagion where people were reselling other people's risk. And so, I think people are naturally worried about that. And so, you have to do things in a very conservative way, in general. So I think that's one component. You can do some more active things. I think the other thing that we've seen work very effectively, so coincidentally with the Bitcoin denominated convertible note, it was something I'd thought of myself as a potential strategy, and then the blockchain group went with it. So I'm a little confused if I told Alexander, because I talk with him socially. I don't remember if I did, or if they reconstructed the same thing. I mean, it's not a hard thing to arrive at, right?
Yeah.
But I think that they've demonstrated, and I participated in the private placement and multiple tranches of their converts, that's a very interesting mechanism, because it can, you've got the investor is lending Bitcoin to the company, and they have the conversion premium where they can see they could profit from an uplift in the share price with a euro-denominated conversion premium indexed off the share price. And yet it's a very safe instrument in terms of debt ratio risk, right? If somebody were to pile on a lot of debt on a Treasury company and you get a bear market or a pullback, it starts to stress, add risk to the company. Whereas with the Bitcoin denominated convert, if it doesn't convert and you get a severe bear market, well, the collateral is the same instrument as the debt. And so it's, it can run through a bear market and come out the other side in principle without issue. So I would be interested to, combine some of these factors.
Yeah. I mean, we've talked about it before, but I think a refix tool,
I like that too.
Is something that you could use, because at the end of the day, you're a Bitcoin treasury company, you want the Bitcoin, right? You don't want to have to give the Bitcoin back. So I think if we would, maybe this is something you can do with BSTR, is have a convertible bond with a refix in it, because then that means no matter what, and you could add mandatory conversion in it. So you don't actually have to pay back the cash, you can pay it back with, or the Bitcoin, can pay it back with stock. Obviously that can get very bad if your parity goes too low.
Right.
But a refix could actually end up being quite an interesting trigger to actually propel the value of the convert even higher.
Right. Yeah. I mean, I think a refix is something that hasn't been tried. So I'm very interested to see a treasury company try that. And I think that makes a lot of sense, because it doesn't kind of lock in a fixed view that you've got to capture premium above this particular starting point, which is quite arbitrary.
Yeah.
And the whole mechanism is indexed to the Bitcoin price, which can still be macro volatile.
Yeah.
So refix, I would argue, is in shareholder interests.
Yeah.
But
it's also it is in the interest of the investor investing in it too.
Right.
The great thing about it.
Yeah, it's virtuous. And I mean, on the other topic with the forced conversion, Some of them have soft calls or forced conversion at different periods.
Yeah.
H100 is, I think they can force convert that quite rapidly, actually.
Yeah. I think we talked on the way here about pref market, given you've done a convertible pref in the US already, or preferred share, a preferred equity.
Well, it's an option. So
yeah,
there is
not quite, but given it's in the money.
There is an anchor in it, so it will be there. The question is the final size.
Yeah.
But the indications are that there is appetite to fill that.
So you've
actually to fill it at a size where it would be in a pref index, actually, because over 250 million, there's an index for those.
That's very interesting. I didn't know that. Okay. Well, anyway, so we were talking about it on the way over, and the fact that, you're very happy, obviously, paying a 7% coupon where, obviously the rates are potentially high. I mean, that coupon's been brought down by the convertibility of it. But maybe, that implies a coupon of sort of 12% with no convertibility option. Maybe just think through what this means for fixed income markets as we were discussing.
Well, right. I mean, there are not many prefs related to Bitcoin Treasury companies in the market. Saylor was the first one. It takes a certain size to even do them.
Yeah.
And so I think it's useful if there are more Treasury company prefs in the market. And as Saylor has demonstrated, they are very competitive to the general bond or fixed income market. And so it does beg the question, now those debt markets are enormous, 100 trillion plus type of market, but other companies are satisfying their financing need through that market. And effectively, Saylor and other Treasury companies can come to market with a more financially attractive offering, which is basically transforming debt issuances into firepower to buy Bitcoin on a long enough time frame that it's not immediately exposed to price volatility. I think eventually that's going to have some side effects on the fixed income market. Maybe increase the cost of financing for other fixed income borrowers
if they don't have Bitcoin. Well, it's two things, right? It's like once Bitcoin becomes, understood to be that pristine collateral. Right? If you don't have Bitcoin on the balance sheet, you're actually going to end up paying a higher rate.
Right.
So it incentivizes everybody to slowly start putting Bitcoin on the balance sheet as that part of that collateral mix.
Yeah. I mean, one observation I made recently, which seemed to click for a lot of people, is the statement that Bitcoin is the hurdle rate. So for anybody from the financial management, they know what that is. But basically, for asset managers, you are sometimes charging a performance fee where if you make a good return, you get a portion of the return. It's like, say it's 2 and 20, you get 2% for managing it.
Yeah.
So your costs, 20% of the performance. But often there'll be a negotiation that the client wants to only pay 20% above a hurdle rate because they can say, well, I could place the money in treasuries for 4%. I don't want to pay you, 20% of the 4%. So they say, fine, it's 20% of the performance above 4%. And so that's the hurdle rate. And so the statement that Bitcoin is a hurdle rate is saying that, look, your fund is not succeeding if it doesn't exceed Bitcoin's performance. And as you've seen, basically nothing has or can outperform Bitcoin. So the conclusion is, you should stop doing what you're doing, sell your business, wind down your fund and buy Bitcoin, or just advise your clients to buy Bitcoin. Or, and that's where the treasury companies come in, so your only hope of outperforming Bitcoin is to structure the business so that it has its reserves in Bitcoin, plus some cash reserves for operating, reinvest in your business, your products, your revenue streams, and use free cash flow to buy more Bitcoin. And in that way, you can get a company that's increasing Bitcoin per share, and then you could outperform Bitcoin, obviously with some implied volatility by how the capital markets price that premium.
I think we're at a unique time where, as we said again, the fiat money printing has just pushed valuations in the financial markets to such a degree that these Bitcoin treasury companies are acting as like a release valve into equity portfolio managers' portfolios where they need to outperform the Mag 7, which just look ridiculous on a valuation basis. They need to outperform the cost of debasement where the bond market is not paying them anywhere near that level. And same for volatility that's been dampened so much by money printing as well. So I always say it's like the release valve. And so that I feel like we're at a moment in time with these Bitcoin treasury companies where, you've got that huge exponential return that's being driven by that release valve power of the fiat money printing.
Yeah, I mean, it's a question people will ask is, is there going to be saturation in treasury companies? And I think the answer is, because of what we just described with the hurdle rate, the release valve, that basically, assuming the Bitcoin phenomenon continues to demonetize other asset classes, that eventually all companies will be Bitcoin companies. They'll have their treasury in Bitcoin. Bitcoin will become less volatile, but it will become, the way to protect against inflation, a treasury asset. And so, with that outlook, it's not saturated, and it's a huge arbitrage. So,
We've got, what is it? Even if it's 150 companies, I think the combined market cap is not going to be much more than 200 billion.
Right. And I mean, you're talking about 200 billion, right?
Exactly.
So,
200 billion purely in the equity markets, let alone the bond markets, let alone everything else.
Right. So, I mean, I would say, even if the big cash-rich company like Apple, Berkshire Hathaway converted, 80% of their cash into Bitcoin, doesn't make a dent.
One more thought before we wrap it up. But your Bitcoin as a hurdle rate thought experiment, I think, is very interesting where that goes, because Jack Mallers made the point when I saw him in Amsterdam in October that now every decision that he makes is based on Bitcoin as a hurdle rate. So if someone walks into his office and proposes a new business that, can it outperform Bitcoin in 3 years' time? Otherwise, what's the point of investing in it? Because I can put Bitcoin on the balance sheet. And once your balance sheet is in Bitcoin, that then creates this much better capital allocation behavior, right? Because you've got Bitcoin as a hurdle rate. Before we wrap up, any particular thoughts on that?
Well, I think that's true. So, I mean, I think that's, the argument with the hurdle rate is that if you can't beat Bitcoin, you have to join it. So you have to restructure your country around Bitcoin. And as Jack was saying, that optimizing around that causes you to think about things in a different way, which is probably a clearer way. If you accept that Bitcoin is a hurdle rate, then you're making a misstep if you don't, reorient around that benchmark. And I mean, for myself, not sure exactly when it happened, but, I had, personal stock portfolio and different investments and started investing in Bitcoin in 2013. And somewhere along the way, I switched over to denominating my portfolio in Bitcoin. The question wasn't how many dollars or euros. If you accumulate and track if you're growing that per year, but are you growing in Bitcoin per year? And so, effectively, that's now expanding into, well, what about your company? And of course, with a company, it's share oriented, so it's Bitcoin per share. So I think, people say, well, Bitcoin can't be a unit of account. It's volatile. Okay, but it can be a unit of sort of treasury reserve, a unit of savings for now.
Yeah. Always so much to talk about. Thanks for being here, Adam. Really appreciate it. Cheers.